Hi, and welcome to the Market Week in Review for the week ending 20th of June 2025. My name is Alex Kusley. I am a Senior Portfolio Manager based in Sydney. I hope everyone in the Northern Hemisphere is enjoying the return of summer as we here in Sydney are experiencing the beginning of winter. There's quite a lot going on right now, but the three key things to talk about, I think, really are the tensions in the Middle East, the Fed meeting that we had this week, and then also some data that came out of China. So if we start with the tensions in the Middle East, so at the end of last week, Israel launched an offensive in Iran or on Iran, and then we've seen a retaliation from Iran. And the key watch point that has evolved over the last week, the last couple of days, is President Trump and the decision from the US. And so there has been flagged that the US will make their decision on what to do in the next 2 weeks as to whether they will intervene or whether they will stay out of this conflict. So far the market reaction has been fairly muted. We saw a sell-off at the end of last week, and then markets so far have been fairly resilient, noting of course that this is a shorter week with Juneteenth in the US. So the key watch points for us over the weekend and into next week really are, do tensions escalate further, and what is happening with the energy market. That is really the key linchpin for financial markets, is the price of energy. So do oil prices surge, and so far they've been relatively contained through the week. If we move across to the Fed, so everyone expected they wouldn't cut interest rates. They didn't cut interest rates, and the focus was really around the dot plot. So the Fed participants project out where they think the the federal funds rate will be over the next 1, 2, or 3 years. And for this year, there is still a median of 2 cuts. There's a little bit of a split, some think 0, some think 2. We think that as we approach September, if we don't see a tariff inflation spike or a spike in inflation from tariffs, which we haven't seen so far, or indeed if the labor market is continuing to cool, that a September rate cut is still quite likely, and then the potential for one in December. And that's pretty close to market pricing right now. And so the real watch point really is the inflation side. Do we start to see a pickup in inflation as these tariffs have a delayed response from prices? And then the labor market, do we see signs that the labor market deteriorates at all, or does it hold fairly steady? Then finally, closer to my home in China. So we got a bunch of data the monthly data dump out of China for the month of May. And generally it was disappointing, with one exception. So the consumer side, so retail sales, was actually notably stronger than expectations. There are a couple of things going on that we should be cautious of. So firstly, the government have been doing quite a bit of trade-in programs. So mobile phones, household appliances, you can trade in and get something newer. That seems to have driven quite a bit of the result. But the thing that is early days, and we've flagged this in previous market week in reviews, is the Chinese property market appears to be unthawing after 3 years of very little transaction volume. That has been improving since the start of the year, and housing related consumption does appear to be accelerating, which is quite encouraging. Again, it is early signs, but the housing market is quite important for consumption. When you buy a new house, you have to go out and buy new appliances, furniture, etc. And so if that is a sign that we are seeing that come through, that would be quite encouraging. But nevertheless, when we think about growth for the next 6 months, next 12 months, it's still fairly trend-like or even below trend. And that lingering threat of what tariffs would mean for Chinese exports is still hanging out there. And as we approach the middle of July, when the 90-day pause is over for the rest of the world, and then a bit later with the pause for China, that will be where the real focus will be for the Chinese outlook. So with that, I hope you have a great weekend, and we look forward to speaking to you soon. Thanks.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.